Welcome, everybody. Thank you for joining us today. We carved out an hour today to talk with you about the basics of down payment assistance programs, or more broadly, home buyer programs. And we want to give you the foundation of knowledge, the information you need to know to go out to new clients, existing clients, prospective home buyers, and enhance your marketing, bring up the topic of down payment, illustrate a path to down payment solutions, and do so with confidence and clarity as you approach new buyers, as you approach loan officer partnerships, be they existing or new. So my name is Sean Moss with Down Payment Resource. We also have in the background Melinda Harris, Veronica Candelwall, and Fern White, who are going to be answering your questions as we go. We have a very large audience today. Please keep it interactive. If you want to share stories about a buyer you worked with, if you've got a success story you want to share that the buyer got a down payment assistance program, what were the details of that story? We would love to hear that story and potentially share that. But also, if you have any questions as we go, use the question and answer feature of Zoom, and Melinda and Fern and Veronica will be in the background answering those. We'll try to leave a few minutes at the end as well for Q&A. But a little bit about Down Payment Resource before we dive in today. We track and monitor all of the homebuyer programs across the country for down payment help, closing costs help, tax credits, affordable first mortgages, and more. All of this is aimed at helping you and your loan officer partners be the down payment hero to buyers. We have integrated into MLSs across the country. We'll share with you who those partners are, including our newest one, integrating down payment assistance information into property listing data, putting information about DPA programs at your fingertips and at the fingertips of your clients. And we also have a lead generation tool that is available to members of our MLS partners, and we have a version that's available to others elsewhere as well. So we'll talk about that a little bit too. But the crux of the conversation today is resources you need and the dialogue you need to connect home buyers to the down payment help that they need. So what we're essentially talking about are loans, grants, tax credits, and other homebuyer programs that can help those homebuyers achieve the down payment faster, cover closing costs, better understand down payment requirements in general, and ultimately and hopefully get them into a home sooner than perhaps they thought was possible. There are a lot of potential homebuyers out there that are income qualified, credit qualified, but for many reasons, they don't think that home ownership is within their reach, or they don't think that they are ready, or they have misperceptions about what's required in terms of down payment or other factors. So we want to get the message out there that there's help and that there is a faster path to home ownership, and give you the tools and resources and knowledge you need to have those conversations and to start those conversations. So big picture here in terms of what's going on with down payment assistance programs. Of the over 2,000 programs across the country, 73% of them are some form of at closing down payment or closing cost assistance. Now, there are many types of down payment assistance. So you'll hear DPA or down payment assistance used very broadly to describe the idea of help with down payment and closing costs at closing. But 64% of those programs offer deferred payments, meaning you get the down payment assistance up front, but you don't make monthly payments on that down payment assistance on those dollars. Now, they may be forgiven over time. 43% of all down payment assistance programs are forgivable, either at some point in the future or incrementally over time. In fact, 38% of all down payment programs are both forgivable and come with deferred payments. Now, some of them are grants. That means it's a true gift up front. Some of them have a monthly repayment. Some of them are repaid when you refinance or move out of the house or sell the house at some point in the future. So the point is, there are many types of down payment assistance. We're going to break that down in a little more detail today. And we're also going to talk about two of the other most popular, most common types of homebuyer assistance: affordable first mortgage loans, which typically come from your state and local housing finance agencies, and mortgage credit certificates, which are tax credits. There is a collection of other or additional programs that are less frequent, less common. We're not going to touch on those necessarily today. We want to touch on the most common, most prevalent, most popular types of homebuyer programs and break those down for you a little bit more so that you understand how they work and what they offer, but also how to talk about them and bring these up in conversations with prospective home buyers. Now, before we dig into that, we do also want to clarify that no matter where you are in the country, down payment assistance is available everywhere. So whatever market you work in, whatever state or states you're licensed in, wherever your clients are buying a home, there is down payment assistance available. In fact, in California, Florida, Texas, there are many, many programs. There are dozens in most other states, but every state has a state housing finance agency, at least one at a minimum. And their programs are available statewide. Now, many of these programs have purchase price limits and income limits, and we're going to look at that in more detail. But geographically, there is no market, there is no city, there is no county in the United States that doesn't have some form of down payment assistance or home buyer assistance available to buyers in that state within the guidelines of those programs. Now, who offers these programs? I mentioned already, every state has a state housing finance agency, at least one. Also, there are municipalities all over the country that get funds from HUD or other sources. So those cities and counties may offer down payment assistance, closing cost help, and so forth. We see employers offering these programs, especially university systems or hospital systems, medical systems. Many of them, or municipalities even, many of them will offer down payment or other home buyer assistance in order to recruit or retain talent. There are nonprofits all over the country engaged in all manner of housing counseling, home buyer education, and including down payment help. Then there are housing authorities, community development financial institutions, federal home loan bank system, land trusts. Some of your local realtor associations even occasionally offer down payment help or closing cost help through maybe foundations. So there are all kinds of entities across the country that are offering these programs. We track and monitor the details and the funding status of those programs so that you can focus on marketing, education, and awareness. Now, state of DPA, what's going on with down payment assistance? Just to be clear, down payment assistance is absolutely still available. It is not going away. In fact, there is more attention on down payment assistance and affordability now than in many, many recent years. So every state housing finance agency remained open and accepting reservations through COVID last year, year to date this year. In fact, many housing finance agencies, especially state HFAs, had record years last year, and that continues in large part this year. And for any of you that are loan officers on the call today, that's purchase business. That is not refinance business. We're not mixing the two here together. So there's record volume to the tune of tens or hundreds of millions being done across the country with down payment assistance for purchase transactions. In addition, local programs now are generally all available if they're funded. Now, funding can be seasonal, especially for some local programs, but not for your state housing agencies anymore. So local programs are now widely available. One adaptation that many local program providers had to do last year and perhaps into this year was to find an online outlet for their homebuyer education class requirements. But there are several online vendors out there that offer those classes. So that has enabled a lot of local down payment assistance programs to ensure continuity of their available programs. And then we are adding new programs all the time from municipalities, nonprofits, state housing finance agencies, and so forth. And all told, over 80% of all of these homebuyer programs are funded and available today. Now that changes because yes, some programs, especially at the local level, their funding is seasonal. However, we track all that right now. Over 80% of all these programs are funded and available, and that's a normal number. There is never a point where all of the over 2,000 programs are funded at the same time, but there are plenty of programs and layering opportunities in most of your markets. So there's usually a very dynamic array of homebuyer assistance programs available. And there are some universal requirements for these programs. We are not talking about commercial properties. We're not talking about farms, raw land. We are talking about residential purchase transactions where the buyer intends to own or occupy that property as their primary residence. There is also typically a minimum buyer investment, a cash investment that can range depending on the program from 500 to 1,000 to $2,000, or 1% of the purchase price. Um, However, the part of that investment that buyers make is the home buyer education class that they are typically required to complete. That's an investment of their time and their resources and their energy to become better educated about the home buying process and about really long-term ownership. We'll talk more about those home buyer education requirements in a moment. And we're also not talking about cash buyers. We're talking here about programs for those who are financing their purchase, need some help with down payment or closing costs, and therefore must qualify for a mortgage, their first mortgage as well. So those are some sort of universal requirements. But what we really want to do in the crux of the webinar today is breaking down the three most common homebuyer programs or types of homebuyer programs: the down payment assistance program, the affordable first mortgage, and the mortgage credit certificate. Before we do that, though, I want to ask Melinda if in the background, if she can launch a poll. We just want to gauge the audience here. What percent of your business comes from first-time home buyers? And you can click your answer on the screen here. Tell us what percent of your business is made up of first-time home buyers, and then we'll share the results here, and we'll go on ahead and break down the most common types of home buyer programs. So go ahead and click your answer on the screen, and then we'll share the results. And Mel, if we get to critical mass here, let's go ahead and shut it down and look at how often our audience is working with first-time home buyers. Okay, so quick breakdown. Wow, this is actually surprising. More than 21% of you said more than 75% of your business comes from first-time home buyers. That's actually a lot. Now, this is an awkwardly even spread here. We typically see more on the lower end, where realtors and loan officers are not necessarily focused on first-time home buyer business and take referrals as they come. But this looks to me like a lot of you are carving out as a niche, working with and marketing to first-time home buyers, and that's great. Now, to be clear, and we'll cover this in a moment, let's go ahead and move on here, Mel. These programs are not just for first-time home buyers, and we'll talk about that in a minute. But to know and to see and to quantify here that many of you are engaging with or trying to engage with first-time home buyers more frequently, that's good, because there are tons and tons, to the tune of tens of millions, of income and credit qualified, mortgage ready millennials out there that just need to know what it takes to buy a home. How much down payment do I need? How am I going to compete for a property? How am I going to win a bid? There are a lot of challenges they face, but we have all the information here with this group that we can give them if we just illustrate the down payment requirements for buying a home and then the path to solutions. So let's start breaking down the three most common types of home buyer programs, and we'll start with down payment assistance. So these are obviously the most common type of home buyer program, typically nonprofit or government funded. Your states are typically leveraging bond funds or other methods of funding these programs. Sometimes employers offer them as incentives, but generally they range from several to tens of thousands of dollars. Now, I want to clarify, our audience here today is all over the country. So you may be in California in a higher cost market, and you may have access to programs that offer 10, 15, 20, 30, $50,000 easily. Now in, let's say, Metro Atlanta, maybe you're looking at, 7,500, 10,000, 15, 20,000. But a lot of these programs, as you'll see on several metrics here, are always market adjusted to reflect the dynamics of your market. You also may hear all kinds of terms to describe down payment assistance programs. So for a moment, if we harken back to my comments earlier about the different kinds of repayment structures, there are grants. So you may hear DPA or grant used interchangeably. Not every down payment assistance program is in fact a true grant, but certainly plenty of them are. Some of them are repayable. You close, you pay on your mortgage, you pay on the down payment assistance every month. Some of them are deferred or silent seconds. Monthly payments are deferred. You get the assistance up front. Maybe it's forgivable over time. Maybe it is repaid when you when you refinance, you sell, you move out, you rent the property out. And then, of course, some are forgivable. And within each of these categories, even there's all kinds of variation. So, a down payment assistance program that's forgivable might be forgivable over the first 5 years at 20% per year, or it might be forgivable at the 10th year in full if you stay in the property for 10 years. There's a lot of variation there. And again, we track and provide you with all of that detail per program. And we're going to show you how to access all of this later. But suffice it to say, down payment assistance programs are widely varying, but on the whole, as a category, they are by far the most common type of homebuyer assistance. Now, what can you use this money for? Obviously, down payment, many times or often closing costs. Sometimes you can cover prepaid expenses as well. And some of these programs will allow for other things like repairs to the property to bring it up to code, or to make accessibility improvements, or other repair uses. So there are other potential uses beyond just down payment help that these funds can be used for. We hear a lot of questions now about the appraisal gap. Can you use down payment assistance funds for the appraisal gap if the appraisal comes in lower than the purchase price, the contractual purchase price? Typically, no. However, if the buyer has their own funds, they can use that to cover that appraisal gap and then use the down payment assistance. So,
Hey, Sean, I'm so
yes.
sorry to interrupt, but we're having some people saying that they're having a blank screen.
Oh my gosh, I'm so sorry. Okay.
Okay, thank you.
Okay, let me go back a couple steps here. So we got into down payment assistance. Guys, I'm so sorry. We got into down payment assistance. So I covered the several types of repayment structures. There are plenty of them out there. And then there are potentially other eligible uses for these funds beyond just down payment help, including closing costs, prepaids, repairs to the property. Now we're getting into this myth that down payment assistance programs are only for first-time home buyers. That is not true. In fact, 38% of the homebuyer programs that we track around the country, which we believe to be all of them, do not have a first-time homebuyer requirement, meaning repeat buyers, current owners can access these programs. Now, in addition to that, we also have to remember the definition of a first-time homebuyer for the purposes of these DPA programs is someone who has not owned a home in the last 3 years. And for some program providers, that gets even more specific and expands the audience even more. You cannot have had ownership interest in a primary residence in the last 3 years. And there are some variations of that depending on the program provider and the part of the country. But it all hinges on the 3-year rule. If they haven't had ownership interest basically in a primary residence in the last 3 years, they're a first-time home buyer. Now, again, that's going to vary by program, but that opens the door to people who have owned in the past and don't now to access a lot of these programs as a first-time home buyer. But it also keeps the door open potentially to people that currently own or recently owned, because not every program clearly has a first-time home buyer requirement. Now, what are some interchangeable terms that we might hear, or some terms describing down payment assistance? I mentioned earlier, grant. You might hear the term grant used interchangeably or synonymously with down payment assistance. Not every DPA is a grant. Yes, plenty are, but they aren't all grants. Many programs are forgivable, meaning the down payment assistance funds are forgiven over time or at some point in the future. We talked about deferred payments. The affordability period is the period over which generally the buyer must remain in that home as the owner occupant to accrue the benefits of forgivability or payment deferral. You may hear some of these referred to as a second lien or a subordinate loan or a second mortgage. Yes, down payment assistance programs that are not a grant do incur a second lien, or if you're combining DPAs, a second or maybe even third lien on the property, essentially becoming a subordinate loan. And then, of course, whether or not that loan is paid monthly or forgiven, that depends on the terms of the program. But wanted to throw some of those terms out there because you will hear those, especially as you get more and more educated about DPA programs. Now, what are some of the basic eligibility requirements for down payment assistance? Most programs, or many at least, have income limits. And most programs also have purchase price or sales price limits, beyond which the buyer is not able to access their program. Now, I mentioned earlier, these programs are always market adjusted. You will see much higher income and purchase price limits in South Florida, California, New York, Seattle than you would in Omaha, Cincinnati, Louisville, Kentucky, right? So higher cost market, higher maximum purchase price limits, and higher income limits from the program providers in that market. Location also makes a big difference. Every state, as we discussed earlier, has a state housing finance agency. But when you get down to the local programs, they all have their own local or sometimes hyper local jurisdiction where their program is available. And that's part of what we do too, is we track where the program is available. So as your buyer indicates interest in one city or another, and you cross municipal boundaries while you're searching for listings for them, you're going to potentially see a different list of programs available in one city or one county or one market versus another. There are also credit and FICO requirements for these programs. We mentioned earlier, we're talking about buyers here who are financing their purchase and thus qualifying for a first mortgage. Well, likewise, they have to qualify for the down payment assistance from a credit perspective. So most programs will go down to 620, 640, 660 FICO range. There are some that where the floor is a little higher than that, but generally speaking, down to 620 is about the range for most down payment assistance programs. Below that, you won't see a lot of down payment assistance. And then, of course, you have to credit qualify. And then homeownership history. We just talked about the first-time homebuyer requirement. That is not a requirement for 38% of homebuyer programs. But if they do have a first-time homebuyer requirement, it's important to look at their definition of a first-time homebuyer. Does previous ownership matter? What if it was not in a primary residence, and so forth? And we're going to talk about these last 2 points in some sort of tangential facts at the end here, but military service and profession can make a difference in terms of which programs are available to you as well. I'll break that down here in a few more minutes. So what are the advantages of some of these down payment assistance programs? Well, we're obviously lowering the loan to value. Bigger down payment, lower loan to value, right? When you do that, you are lowering the debt to income ratio. You are also potentially improving mortgage insurance pricing or reducing the cost of mortgage insurance. As you increase your down payment and you lower your loan to value, you also open up the door for better, more affordable first mortgage options. So think of this: FHA, upfront mortgage insurance premium plus monthly mortgage insurance, which is more expensive than conventional, and it never goes away. Versus conventional, if you can get to that 3% or 5% down mark, and your LTV is 97 or 95, and you can get a conventional first mortgage, you don't have that upfront mortgage insurance premium, and your monthly mortgage insurance is cheaper and goes away once you get below 80% LTV in the future. So all of this, of course, lowers the monthly payments, which allows the buyer to supplement or to retain some of their income and tuck it into savings, allowing them to remain liquid. A down payment assistance program supplements their cash to close. Maybe they don't have to ask the seller for closing costs because they've got that covered through this down payment assistance program that they're using. And then, of course, if we're helping buyers retain their savings, we're contributing to their liquidity to enable them to deal with the inevitable costs of home ownership. They move into the house, the appliances have to be taken care of, the roof has to be taken care of. They want to make their own cosmetic improvements to make the house their own. All of these things require liquidity. And if we can help them retain their savings instead of spending or expending every last penny they have to get into the house, not only do they have that cushion to help them, get through the obligations of home ownership, but we also have seen studies that show that just having 2 to 3 months of reserves at closing contributes to the reduction of delinquency rates down the road. So there are a lot of benefits to that as well. And then, of course, all of this, the more we improve pricing, enable liquidity, and lower monthly payments, it increases the purchasing power of that buyer or that household and their income. So keeping income the same, they can potentially afford to get a little bit more house or get that one extra thing that they would like to have in the house because they've got a down payment assistance program helping them do so. And then homebuyer education, we mentioned this earlier. Many programs require that the buyer complete a homebuyer education class, which is typically 6 to 8 hours of HUD certified homebuyer slash homeowner related content, preparing that buyer to be a more educated, more equipped client for you because they're learning about the home buyer process, or sorry, the home buying process. They're learning about the financing process. So they're becoming better prepared buyers for you. And they are also learning about the obligations of home ownership long term to help enable them to be more successful owners. And then, of course, there are online options that are available for these classes. Many DPA providers now offer an online class that enables your client to complete the class sooner or at their leisure. And there's no reason not to do that, quite frankly. The sooner that your buyers take this class, quite really, whether or not they're using a down payment assistance program, then the sooner they're going to be better prepared clients for you and better prepared to go into home ownership long term. Now, that was down payment assistance. Let's look at the second category of home buyer programs, the affordable first mortgage. Now, we're not talking about Fannie Mae, Freddie Mac, FHA, VA, USDA. That's not really what we do at Down Payment Resource. However, there are some unique benefits and characteristics of affordable first mortgage products and programs, typically from your state housing finance agency, or in some states, local housing finance agencies, that are worth noting because they can, first of all, be combined with the down payment assistance programs from that same agency and sometimes layered with other DPA providers. They can sometimes be combined with the tax benefit of a mortgage credit certificate, or MCC, which we're going to look at next. But some of these affordable first mortgage programs also offer on the first mortgage reduced interest rates or expanded first mortgage options. So, for example, the HFA Advantage or HFA preferred programs that are only available through HFAs or housing finance agencies. That's typically your state housing agency. And some of those come with reduced mortgage insurance costs. And as with the benefits of a down payment assistance program, reduced rate, expanded first mortgage options, reduced mortgage insurance costs, those all also contribute to lowering the debt to income or qualifying ratios and expanding purchasing power of those buyers. So, this all reduces the buying costs, lowers monthly payments, again, lowering debt to income ratios, increasing purchasing power, and ultimately, or hopefully, expediting home ownership. And I want to think about that for a moment. We're talking here about creating buyers that were probably likely to renew a lease, maybe several more times before they thought seriously about home ownership, but for the fact that we got in front of them with a message of hope and opportunity, saying, hey, there is a path to down payment help. There is a path to home ownership here for you. It's going to take you, years to save up however much you think you need to save up. And surprisingly, a lot of buyers, potential buyers, still think they have to have 20% down to buy a home. So we have to combat that, let them know that also as you save, prices go up, right? So it's sort of like chasing the goalpost as it's constantly moving away from you. So when we talk about expediting home ownership, what we're really saying is we're talking about creating buyers out of renters right now. People that think they can't buy or don't think it's within their reach. We need to let them know, and we can build our purchase pipeline. Loan officers, great way to navigate a transition from heavy refinance volume to building up a purchase pipeline. Now, let's look at the third in our three most common types of homebuyer programs, the mortgage credit certificate. This is a tax credit. Also, as with the previous category, typically coming from your state housing finance agency. There are some local housing finance agencies in some markets around the country that offer one. And not every state has one, to be clear. Now, there's been some volatility in terms of availability of mortgage credit certificates over the last couple of years. And that's actually because there's been so much demand for the state's down payment assistance and affordable first mortgage products. So, what is a mortgage credit certificate? Where they are available? It is a federal income tax credit, not an income tax deduction. So, if you're familiar with the mortgage interest deduction, that has changed recently. That allows you and has always allowed you to claim as a deduction of your taxable income any mortgage interest paid in that year. But recently, in the last few years, the standard deduction has gone up. Most people, even if you own a mortgage, are not necessarily not standardizing, itemizing their deductions. Well, the difference here is even with a change like that, a mortgage credit certificate is still able to be used because it is a tax credit. It is an annual tax benefit. It is good every year for the life of that first mortgage loan with which it was issued. And it is there to help offset mortgage interest costs. And you still get to deduct any additional mortgage interest paid after you've claimed the credit. Now, each MCC provider allows you to claim a varying amount of the mortgage interest paid as this credit. I'm going to give you the math here in a moment to show you. But this is all about reducing your income tax liability at the end of the year. And again, every year for the life of the loan. So this is good every year, right? It's not a one-time thing, nor is it an at closing thing. But it also, in some cases, allows the loan officer or the lender to take that mortgage credit certificate, that amount of tax credit expected at the end of the year, and annualize that over the year to increase qualifying income. And then still some mortgage credit certificate providers will reissue that certificate through a refinance done through their agency. So those are some of the basics of a mortgage credit certificate. But to kind of simplify this, we used round numbers here. Here's basically what happens. Picture a $200,000 home and a mortgage rate of 4%. Now, if you made 12 payments in your first year, then you paid, if you paid every month in your first year, you paid $8,000 in interest in that year. Now, I mentioned a moment ago, each MCC or mortgage credit certificate provider will allow you to claim, anywhere from 10 to 20 to 30% sometimes of the mortgage interest paid as a tax credit, and the rest gets deducted. So let's say in this example, the mortgage credit certificate provider allows you to claim 25% of the interest you paid on your mortgage as a tax credit. That's $2,000. That's a dollar for dollar reduction of $2,000, reduction of your tax bill. It's not reducing taxable income, it's reducing the tax bill, the tax credit. Now, I'm going to kind of leave it at that. We're not tax policy advisors, we're not CPAs here, but that's generally how a mortgage credit certificate works. If they are available in your market, absolutely bring it up with buyers. What a great long-term life of loan benefit. And then the remaining $6,000 in this example of mortgage interest paid still gets to be itemized as a mortgage interest deduction. So that's the mortgage credit certificate. And with that, I do want to get into some unique features and benefits for all of these programs. There are some outlier scenarios and additional opportunities we want to talk about here. But having gone through all that, let's put another poll up on the screen. This is 2 of 2, so we won't have any more after this. But tell us, how often do you work with buyers who use a down payment assistance program, or maybe an MCC, or the affordable first mortgage? But let's just say, how often do you work with buyers who use these homebuyer assistance programs? And maybe it's never happened, and you're trying to carve out that line of business. Maybe it's rare upon referral or circumstance or happenstance, or is this something that you're frequently dealing with and frequently offering and working with for your clients? So click your answer on the screen, and then we'll share the results, and then we'll get into some other unique features and benefits of these homebuyer programs. Okay, so this is actually another awkward skew that we don't see that often. 42% of you have never worked with a buyer using a down payment assistance program. So we typically see a big number there, but 20, 25, 30%, that's pretty big. So I would ask why. And this is not to denounce anyone's efforts or lack thereof, but maybe you've been focused on commercial, luxury, relo. If you're a loan officer, maybe you've been focused on refinance or whatever the case might be, I would just ask, why is it that you've never worked with a client using a down payment assistance program? Is it just that you didn't know these programs existed or weren't comfortable approaching the topic or didn't have a loan officer partner that you knew and trusted with a client using one of these programs? Or did you have a bad past experience representing a seller and didn't want to get into them representing buyers? I'm just throwing examples out there. There could be any number of reasons why you hadn't worked with such a client. But for all of you, even if you're frequently working with clients who use down payment assistance, we hope, and our goal here today is to give you enough information to overcome any inhibition about the programs, about starting that dialogue, and to show you the path to solid partnerships with agents, with your peer agents, with loan officers, and ultimately with buyers, potential buyers who might benefit from these programs. So let's talk about some additional scenarios where these programs might come into play and offer you a new marketing opportunity or pipeline growth opportunity, and offer new buyers the opportunity to explore home ownership. Targeted areas. There are plenty of programs that sort of bound targeted areas where they are targeting their initiatives to increase the home ownership rate, to increase interest in purchasing in that area. And as part of the incentives for purchasing in a targeted area, many of those providers who have them, which are typically, again, state housing finance agencies, and typically these are in the more metro areas, but often the first-time homebuyer requirement will be waived if it was even present to begin with on their programs. So enabling current and recent owners to take advantage of that program in targeted areas. There will sometimes be more down payment assistance money available to a buyer purchasing in a targeted area. The income limits and the purchase price limits are typically higher in targeted areas than elsewhere from the same program, right? So what we're saying here is, given program A, if you were to buy outside of a targeted area, the standard program requirements apply. Given program A again, but buying in a targeted area, there may well be no first-time homebuyer requirement, more down payment assistance dollars available, higher income limits, and higher purchase price limits. But these targeted areas are bounded typically by census tract or zip code, or sometimes entire municipalities, but they are geographically specific and typically more metro. Now, profession. I mentioned early on that profession can make a difference when we were talking about down payment assistance programs first. Educators, and not just necessarily classroom teachers, but people who are employed in the education profession. There may sometimes be additional programs available to them that may offer unique benefits or incentives. Now, that doesn't mean a teacher can't go apply for any other DPA. Of course you can. But in some markets, there may be programs that are specifically for or uniquely catered to someone in education, law enforcement, firefighters, first responders, healthcare workers, municipal employees. And the definitions can be quite broad. So I'll take education as an example. That could be somebody, depending on the program, that is a classroom teacher and or is part of the faculty or staff, a librarian, a custodian, a parapro, the school nurse. And the school nurse may qualify as a healthcare worker if there's a healthcare program available. So the definitions can be wide. These programs are not available in every market, but where they are available, they're definitely worth looking at and comparing to your referral partners and your referral streams and where your business comes from. Are you connected to a source of referrals for educators, first responders, and so forth? Or likewise, are you connected to a stream of referrals from military buyers, veterans, or active duty, sometimes even reserve and guard? Because there may be unique programs for those that have or currently serve in the military, including the waiver of the first-time homebuyer requirement. That's very common for veterans. If a program has a first-time homebuyer requirement, often that can be waived for a veteran or an active duty military personnel. You can also, in many cases, combine this with the VA loan, which leads to a common question we get when we bring this up. Why would you need down payment assistance with a VA loan if the veteran can finance 100% of the property? Well, consider this. Yes, they can finance 100% of the property, plus the funding fee. Now they're over they're over 100% LTV, and they also have to cover closing costs. So why not? And what if you could offer that veteran or that military person increased equity out of the gate and help them cover closing costs? So maybe they can compete more aggressively on winning a bid because they don't have to go ask the seller to cover closing costs. They've got it covered through a program that you connected them to. And or they could get more equity in the property out of the gate because even though they used a VA loan, they still put down money and had more equity. So those are just some examples of additional opportunities for some of your clients. Now, we gave you a lot here. How do you access all of this information? If you want to go start a conversation, where do you go to back it up with specific program details in your market for your clients? Anybody, anytime, anywhere in the country can go to downpaymentresource.com. You can do a search for programs available in your area or where your client wants to buy. Or if you are a member of any of our MLS partners, which are listed here on the screen, including our newest partner, California Regional MLS, you have down payment assistance data integrated into your MLS. And we have other webinars dedicated to showing you how that works. In fact, we just wrapped up a campaign with CRMLS to kick off the partnership and show you how this works in Paragon and Matrix. Some of you are on Flex MLS, Rapatoni, but among all of our MLS customers here, whether you're in Florida, Twin Cities, Atlanta, Indy, Boston, Detroit, wherever else, you have down payment assistance data integrated into listings on both your agent views and your client views so that you can see if a property is eligible for down payment assistance help. Click the button, which you see here. This is what it will look like in your MLS. Find out which programs and the details of those programs are available for that property at that price. And all that also goes out in your client portal so that clients, when they're seeing listings that you send them, can also find out about these programs, which, by the way, is where a ton of adoption and usage of our platform occurs. And then you have additional tools and resources available if you're a member of one of our MLS partners, including Down Payment Connect. So realtors, if you are a member of one of our MLS partners, you have Down Payment Connect for free. We can go back to that list of MLS partners in a moment if we need to, but that is a personalized lead generation landing page unique to you where consumers can search for down payment help. But instead of seeing all the programs and details, we want them to connect with you first and start that conversation. There's no limit to the amount of traffic you can drive to that tool, the places you can implement it, or the leads that you can generate. And there is a paid version for loan officers as well that allows you to see all of the programs and their details in your state, customize which programs display to your borrower clients, because we know you can only broadcast those programs that you participate in or that your company offers. And you also, as a loan officer in that version, get an eligibility widget to search and compare programs yourself on behalf of a client. So what does Down Payment Connect allow you to do? Engage and educate new buyers, expand your marketing, let buyers complete a down payment assistance program search, thereby generating a lead to you, which enables you to tap into new and growth markets. And you can enhance all of your digital marketing, web, social, email, with this path to home ownership for buyers that didn't realize it was there. And for those of you that are members of our MLS partners, you also get details of all the DPAs in your market. That's on your down payment resource dashboard, which all of you can access from your MLS dashboard. And if you are not a member of one of our MLS partners, you can go to downpaymentresource.com/DPC, and you can check out the subscription version of Down Payment Connect for yourself there as well. Now, with Down Payment Connect, are you paying for leads? No, you are not. You are not paying for leads. You either have the tool for free with one of our MLS partners, or you subscribe to the paid version if you're not a member of one of our MLS partners, and you are generating your own leads in a creative new way with a unique tool. Now, who else gets those leads? Nobody. They are yours. They are yours alone. Nobody else is copied. Nobody else is buying them. They're not sold or resold anywhere else. Down Payment Connect is yours. It's your tool. They're your leads. They're your clients. We're just giving you a platform from which to broadcast the message that down payment help is out there and you can illuminate the path to that help. We also encourage you to join our Down Payment Insiders Facebook group. These are your peers around the country that are working with down payment assistance programs, working with first-time home buyers. There are agents talking about their loan officer partnerships. There are loan officers talking about how they work with DPA programs and sharing best practices and insights. They talk about how they market, what messages worked, what messages didn't, obstacles they faced, and solutions they implemented to overcome them, all around DPAs, first-time home buyers, and everything relevant to this conversation today. So we encourage you to join that group, listen in, get the fly on the wall perspective, or get involved, get engaged in the dialogue, share your best practices, especially those of you that frequently work with clients using DPA from that last poll. We would encourage you to join, share your successes with other peers around the country so that we can all do a better job of promoting down payment assistance programs, promoting that path to home ownership, and building up our purchase pipelines. So I'll offer this to kind of round things out, and then we'll get into Q&A. Amber is a member of Stellar MLS in Florida. When she started in the business, she found that a lot of her peers had questions and misperceptions about down payment requirements. So she's used Down Payment Connect and has built her business working with first-time home buyers using down payment assistance programs because of that experience. And her business has grown in part because she has tackled the issue of first-time home buyers, down payment obstacle, down payment solutions, and brought those solutions to her peer network and thus her client base now, which continues to grow because of those efforts. So I'll leave you with this. DPA customers become customers for life. The case study I just showed you illustrates that. If you help one first-time home buyer to get into a home with down payment assistance, especially if that transaction may not have occurred otherwise, who do you think they're going to refer business to? Loan officers. Who do you think they're going to send other people interested in financing or even refinancing a home to? And if you didn't help them, if you didn't put a solution on the table, if they found that solution through somebody else, they're going back to that somebody else. So DPA customers become customers for life. We're talking about creating transactions. There are so many millions of mortgage-ready buyers out there who just need to know that home ownership is right there within their grasp. So with that, I'm going to leave our contact information on the screen, and I'm going to defer to Mel and Fern and Veronica here for any themes we can address from the Q&A. And we got about maybe 10 minutes here where we can address questions.
Yeah, hey, Sean, sorry. We have had an awesome group. Lots and lots of questions today. The one question we've had, and we always have a lot, is we are recording this session. So if you missed any part of it, don't worry. We'll send out a recording to everyone along with the slides after the session today. And then for me, Sean, I have a couple of questions that I was marked to ask live because I thought they were really good. But first one is from Martin. Would the buyer start this process before speaking with a lender, or would the lender be doing the research and homework to see what the buyer can qualify for? So basically his his question is, who's responsible for seeing what DPA programs the buyer can qualify for?
I think we all are. I think, as real estate agents, we're all responsible for knowing what programs are available in our markets, bringing that up with potential buyers, leveraging that availability in our marketing to make sure that more of these people are coming to us and talking to us. But Martin's right. The first step before you go out and sign a contract on a home should always be, let's go get with a lender and certainly get pre-qualified. But I think more and more the feedback we hear from agents and lenders over the last, well, at least, this year so far is get pre-approved, send it through underwriting, get the underwriter's eyes on it, figure out what else is left, cover cash to close, figure out where they stand from a cash to close perspective and what the solution for cash to close is going to be. And that kicks off the exploration of down payment assistance opportunities. So yes, all as much of that should be done upfront as possible, including the homebuyer education class. For most programs, when a buyer completes that class, their certificate of completion is good for a year. They have a year to buy a home before they would have to even consider retaking the class. So, yeah, do it all up front, get with your lender and strike up lender partnerships with lenders that know these programs, and just make sure everybody's got all the expectations appropriately set up front.
Great, Sean. I have a couple of questions related to mortgage credit certificates. The first question is the MCC applicable to all types of loans?
Well, it's applicable to, I guess the short answer is no. It's applicable to the mortgage options offered by the agency who offers the mortgage credit certificate. So, if you're working with your state housing finance agency and they do have a mortgage credit certificate, it's typically good for any mortgage you would get through that state housing finance agency.
And then a follow-up question to that is, what determines the percentage credit on the MCC?
The program provider, that's up to them, and they will set that in their program guidelines, and they'll broadcast whether it's 10% of mortgage interest paid, 20%, 30%, but that's kind of the range typically.
Great, thank you, Sean.
And I should add to that last question, it's not going to vary. So the mortgage credit certificate provider will determine what percent any mortgage credit certificate holder will be able to claim. It's not going to vary by person. It's just, that's the program requirement. It is 10% or it is 25% for everybody.
And Sean, this is Veronica. To add one more point to the MCCs, they may vary in percentage, but typically there is a max of $2,000 for those programs. Some of them actually don't have a cap. It just depends on the agency, but typically it's a max of 2,000.
So what else? Mel, Fern, any consistent questions coming in that we can address once?
I have one that I've seen quite often, Sean, and gets asked quite a lot in these webinars, is people are concerned with DPA extending the process, or the closing process taking longer when using a down payment program.
Yeah, so talk to your loan officer, because that shouldn't be the case. And so let me clarify, not a week goes by that the down payment resource team you have on this call today isn't working with realtors, loan officers, DPA program providers, lenders, who will all say, if you're working with them, they know the programs. If the loan officer wants your business, first of all, as a realtor, if the loan officer wants your business and knows the DPAs, offers them, because not every lender offers these programs, and does enough volume and is good at it, and sends good files to the DPA provider, they're doing it inside of 30 days. I was literally on an event earlier this week and another one last week where two different groups of loan officers from different parts of the country were all saying, yeah, we close these in 30 days. We know what we're doing, and we will call the seller and we will tell them, I'll get it done in 30 days. But it requires that you as real estate agents find and strike partnerships with loan officers who do know these programs, who do want that business from you, and who understand the requirements, the nuances, the timelines, and so forth. And if they've been doing it, they know how to do it. They're going to do it just like any other transaction.
Sean, I've been seeing a lot of questions in regards to if someone lives outside of a state that they're wanting to purchase a home in. So if they live currently in Florida and they want to purchase a home in Texas, would they still qualify for down payment assistance programs?
Presumably, if they're moving to Texas to live in the new house they're buying.
Yeah. So my response was, I know from an HFA perspective that you can purchase a home outside of the state they're currently living in, as long as you occupy within typically 60 days of the closing, and it's your primary residence. That it's so owner occupied after that.
Yeah,
go ahead.
60 days is kind of the standard. Now, some local programs, they do want you to have lived or worked recently in that area. But a lot of programs, yeah, you typically have 60 days to move into the house, but it does have to be your primary residence. So you can't, if you live in California and you want to buy a ranch in Montana, that's not what these programs are for.
And another question that I'm seeing over and over is in regards to how you find lenders or loan officers that want to help you and participate in these programs to get home buyers connected to them. If you want to answer that.
Yeah, so a couple things. First of all, talk to the loan officers you already work with. I mean, that's the first place you should go, and just ask them, hey, do you participate in any of these down payment assistance programs? Do you work with our state housing finance agency? Maybe it just hasn't come up in conversation because you weren't bringing first-time home buyers, or you just didn't have a client for which that need would have arisen. They may or may not participate, but another place to go is talk to your state housing finance agency. Go to their website. If you're a member of one of our MLS partners, when you click the down payment button inside your MLS, we show you the programs. And if you look at the details of any program, the first thing we show you is the program provider's published list of participating lenders. Those are the ones that have been vetted and approved by the program provider. Often your state housing finance agency will rank top producers and publish that list as well. I would hit up that list and call them and say, hey, I've got first-time home buyers. Some of them might need down payment assistance. I need to know, I need a partner that I know and trust can get these deals done in the right amount of time, set all the right expectations, and do this error-free, hiccup-free. Call the program provider themselves and just ask them, hey, who submits the best files to you for this down payment program? That's the loan officer I want to work with. Or give me two names and I want to meet them both and compare. So those are a few ideas. You could also talk to your broker or talk to your peers. I mean, there are, if you go back to that second poll that we looked at, or that we had on this webinar, some percentage of you are working very frequently, almost exclusively, with first-time home buyers and using down payment assistance programs. If you're not, there may likely be a peer in your office who is doing that kind of business, and they might have a lender partner and can help you kind of understand what's going on. So that's a great question. That's a very common one. Is there one more? And then we'll be conscious of everyone's time and wrap this up and get the recording out.
I don't have one, Sean. I was just going to say we have tons of questions still coming in, and my advice, my quick last minute advice would just be, please reach out to us at the email on the screen, guys. We appreciate all these questions, and some of them are really good, and I'm sorry we didn't get to them all. But if you'll reach out to us at info@downpaymentresource.com, we'll definitely help you to answer questions there.
Good deal. Okay. Well, thank you everybody for joining. I hope that helped. We'll get the recording out to you probably by tomorrow. And like Mel said, info@downpaymentresource.com for any other questions. Thanks for joining. Get out there and talk about DPAs. Go get Down Payment Connect if you've already got it. If you don't, you can subscribe at downpaymentresource.com/DPC. And we'll talk to you all soon.